China's Contemporary Amperex Technology, CATL, the largest electric vehicle battery producer in the world, has filed for listing on Hong Kong's stock exchange, potentially making it the largest initial public offering for the city in 5 years. The size and timeline of the IPO and timeline were not revealed in the filing. However, Reuters reported that the deal is expected to raise at least $5 billion, citing sources familiar with the matter. That would mark Hong Kong's largest IPO since Chinese TikTok rival Kuaishou's $5.32 billion public offering in early 2021. According to the filing made by the company, the Bank of America, China International Capital Corporation, China Securities International and J.P. Morgan Chase are joint sponsors for the listing. The move to list in Hong Kong is expected to attract global long-term institutional investors, some of whom may be bound by policies that disallow them from buying shares of mainland China-based companies, said William Ma, Chief Investment Officer and founder of Grow Investment Group, a China-based asset management company. CATL is also listed on the Shenzhen Stock Exchange, boasting a market cap of 1.1 trillion yuan, $150.5 billion, according to data from LSEG. The company supplies batteries to big automakers like Tesla and Volkswagen. The timing is ideal as global investors are starting to find China's markets trading at attractive valuations, Ma told CNBC. The listing will also help diversify the sector mix of Hong Kong listed shares, which largely comprise Chinese internet companies and banks, he added. Hong Kong saw a pickup in listing activities in 2024 after 3 consecutive years of declines in terms of deal values, according to data from Dealogic. The city's bourse raised $10.65 billion across 63 deals last year, a jump of more than 80% from the $5.89 billion raised in 2023. In January, the U.S. Department of Defense included CATL and Tencent on its list of Chinese military companies, which would prevent the department from procuring goods and services from those companies starting June 2026. However, the profit impact of the move is negligible, because the companies do not derive significant revenues from the DoD, Macquarie's analyst said in January note. We are proactively engaging with DoD to address the false designation, CATL said in its filing. We cannot guarantee that such attempts will be successful or that the relevant government agencies will not take any further actions. As of September, CATL operates 13 battery manufacturing bases across the world, according to information from the filing. The battery maker also mentioned it is preparing its plants in Hungary as well as other projects in Indonesia. Its joint venture with automaker Stellantis to build a €4.1 billion, $4.2 billion, lithium iron phosphate battery plant in Spain is also underway. CATL's revenue for the third quarter ended September 30 declined over 12% compared to the same period in 2023. However, the company expects its 2024 full-year net profit to increase between 11% to 20% from a year ago, according to a securities filing in January.
Chinese businesses are tapping DeepSeek's newest artificial intelligence model to see how it can improve productivity. The Chinese AI model took the world by storm in recent weeks after showcasing its reasoning process and claims to undercut rival OpenAI's ChatGPT on cost, despite U.S. restrictions on Chinese access to the advanced semiconductors needed to develop the tech. 8 automakers including BYD, at least 9 financial securities companies, 3 state-owned telecommunications operators and smartphone brand Honor are among the many that have rushed in the last week to integrate with DeepSeek. Cloud computing operators Alibaba, Huawei, Tencent and Baidu have all offered ways for clients to access DeepSeek's latest model. This is quite unprecedented, Wei Sun, principal analyst of artificial intelligence at Counterpoint Research, said in an email Monday. She pointed to the rate of adoption, scale of business integration and breadth of specific industries covered. When we have all of these, we know it's making a big social and economic impact, she said. Optimism over artificial intelligence has spread to Chinese stocks. UBS said Wednesday that AI-related Chinese stocks are up by 15% since the start of the year, outperforming the broader MSCI China index by 9%. A big factor in the widespread interest is timing. DeepSeek released its latest R1 model on January 20, and news of its low-cost reasoning capabilities prompted a global tech stock sell-off on January 27, just as millions of urban workers in China were returning to their hometowns to celebrate the 8-day Lunar New Year holiday. As a result, less developed parts of China gained greater understanding of AI and its impact, a topic previously limited to conversations in China's largest cities, said Wenhao Zhang, CEO of the Beijing-based consumer marketing consultancy Doodad. It's a major education of the market. This will push the entire ecosystem's development, he said Tuesday in Mandarin, translated by CNBC. Zhang, who studied AI at Tsinghua University, founded Doodad in 2012 to build customer engagement through social media analysis. He said the company, which counts China Merchants Bank and Toyota as clients, started looking at DeepSeek's offerings late last year, and began using it more after the R1 release in late January. DeepSeek, founded in 2023 out of a quantitative hedge fund, had released a basic version of R1 in November, and a V3 model in December. It launched a smartphone chatbot app in January. Another attractive factor for businesses is that DeepSeek's models are open source, allowing individuals and companies to download and customize it. DeepSeek also advertised drastically lower prices for applications to use its tech versus that of OpenAI. ChatGPT is not officially available in mainland China and requires users to provide an overseas phone number and payment method from a supported country such as the US. DeepSeek changed the perception that AI models only belong to big companies and have high implementation costs, said James Tong, CEO of Movitech, an enterprise software company which says its clients include Danone and China's State Grid. He said Movitech started integrating an earlier version of DeepSeek in the fourth quarter of last year, helping boost sales by about 25% from the same period in 2023. The company plans to launch a new DeepSeek integrated application by the end of March to improve clients' ability to make decisions, he said. Many recent videos on Chinese social media have showed off how to run a local version of DeepSeek on Apple's Mac Mini. Apple Mac Mini online sales in China climbed significantly from November to January versus the same period the year prior, according to data from consultancy WPIC. The electronics-focused JD.com site recorded unit sales of around 20,200 in January, up from nearly 19,400 in December and around 12,250 in November, the data showed. DeepSeek's affordability is pressuring more expensive AI models to cut prices, enabling more businesses to adopt the tech, said Chim Lee, senior Asia analyst at The Economist Intelligence Unit. He added that open-source models allow finance, banking and healthcare businesses, which are subject to stringent data protection rules in China, to develop AI applications locally. It is still very early to point to concrete business applications, but a key takeaway is that DeepSeek will accelerate the commoditization of AI, Lee said. Beijing is also increasing support. China's National Supercomputing Network announced Tuesday that eligible companies and individuals can obtain 3 free months of DeepSeek access, along with subsidized computing power.
Artificial intelligence startup DeepSeek has rocketed into global prominence, shaking up the AI world, but the team behind it is relatively unknown outside China. DeepSeek's founder, Liang Wenfeng, has been dubbed by some in Western media as China's Sam Altman. But unlike his Silicon Valley counterpart, Liang has maintained a low public profile. Liang's team, comprising young graduates from some of the country's leading universities, is also little known. The team consists of fewer than 140 people, according to Chinese state media, though a research paper on its latest R1 reasoning model lists about 200 contributors. CNBC has been unable to confirm the official size of the team. Outside of its core technology developers, DeepSeek has mostly shared the senior management team, operations staff, human resource department and financial accountants of its mothership Highflyer, according to sources familiar with the company. Here's an overview of the people behind the AI sensation and how the startup came into being. In 2015, Liang and college friend Jin Zhu founded Highflyer Asset Management, a quantitative hedge fund that uses complex mathematical algorithms to predict market trends and make investment decisions. Zhu was a graduate from Zhejiang University's Chu Kokon Honors College, which selects top students at the elite university. There, Zhu focused his PhD studies on robot autonomous navigation and machine learning, similar to Liang's focus of postdoctoral research, and was a key member of the Visual Navigation Research Project for China's Lunar Exploration Program. Zhu, who once worked at Huawei Technologies software development in the early 2010s, now leads Highflyer's technology development and crafts trading strategies, his profile page on private equity database Pai Wang showed. Zhengzhe Liu, the chief executive officer of Highflyer, graduated from the same university as Liang and Zhu, before earning a master's degree from the London School of Economics and Politics. Prior to Highflyer, Liu worked at the state-backed China Merchants Bank, where he was engaged with macro research and overseas derivative investment. In an interview with Chinese state media in 2023, Liu said, "We have set up a new team independent of investment, what is equivalent to a second startup, which later grew to become DeepSeek. We want to do things with greater value and things that go beyond investment industry." The pair manage some of the best performing funds under the company's portfolios, with averaged returns over 20% in 2024, according to Pai Wang. That was above gains of about 15% in the CSI 300 index last year, a 5% rise in the small-cap CSI 500. The quant fund's profits were partially channeled to fund the rise of DeepSeek, Liang told 36KR in 2023. In 2023, Highflyer spun off DeepSeek as an independent enterprise, expanding its remit beyond investment and focusing on pursuing AGI. The team consists mostly of local engineering, computer science and AI graduates from top universities in China, such as Tsinghua University and Peking University, many of whom have published recent papers on subjects such as language models and machine learning. A number of team members are also graduates from top American universities with experience at NVIDIA and Microsoft who decided to return to China's growing AI industry, according to their LinkedIn profiles. A key attribute that sets the team apart is age, as DeepSeek favors graduates with less work experience. Instead, they emphasize academic degrees, awards at international programming competitions, research papers published at top industry journals, a headhunter for DeepSeek told CNBC. In the interview in 2023, Liang said experience is less important in the long run and foundational abilities, creativity, and passion are more crucial. In 2024, he said that while the top 50 talent in AI may not have been in China, DeepSeek was aiming to cultivate its own. Top graduates also appear to be attracted to the firm because of its reportedly higher salaries and greater degree of bottom-up management than what might be found at a larger tech firm.
Pope Francis has pneumonia in both lungs and remains hospitalized in Rome after a respiratory tract infection, painting a complex picture of his health, the Vatican said Tuesday. A follow-up CT scan of the pontiff, 88, revealed the onset of bilateral pneumonia, which the Vatican said is requiring additional medications. Nevertheless, Pope Francis remains in good spirits, his press office said in a statement. The Vatican announced Monday that Francis was sick with a polymicrobial infection of the respiratory tract, 3 days after he was admitted to Policlinico Agostino Gemelli, Italy's largest hospital, for treatment of bronchitis. Preliminary tests showed he had a respiratory tract infection and a slight fever. Testing over the past days paints a complex clinical picture, the Vatican said Monday, and he'll need to remain in the hospital for an appropriate amount of time. The Vatican said Tuesday that the Pope's polymicrobial infection has arisen in the context of bronchiectasis and asthmatic bronchitis, and has required the use of corticosteroid and antibiotics, which makes the therapeutic treatment more complex. Polymicrobial diseases are caused by combinations of viruses, bacteria, fungi and parasites, according to the National Library of Medicine. The Vatican had cancelled his audiences as he recuperates. The Vatican said he received the Eucharist on Tuesday and alternated between rest, prayer and reading. He expresses his gratitude for the support he feels at this time and kindly asks that prayers for him continue, his press office said.
Singapore will likely see only a limited, direct impact from U.S. tariffs as the country runs a trade deficit with the U.S., the country's deputy prime minister said. In 2024, the U.S. had a trade surplus with Singapore of $2.8 billion. However, Gan Kim Yong, Singapore's deputy prime minister and minister for trade and industry said that the city-state cannot underestimate the impact of tariffs in the longer term. Speaking in an exclusive interview with CNBC's Squawk Box Asia, Gan highlighted that companies could decide to change their production base. In turn, supply chains and trade patterns will shift, causing greater friction and greater cost in the global economy that may slow it down. When asked if tariffs will affect Singapore's growth projection, Gan said that Singapore does not take its economic forecast for granted and continually works towards meeting, or even exceeding, its target. We try to push the economy a little bit further and hope that we can perform better than we projected, Gan said, adding that the country will also prepare to give some room, should there be any disruptions to the economy. Singapore's economy is heavily dependent on trade, with the country boasting a trade-to-GDP ratio of over 300%, one of the highest globally. Gan's comments come a day after Singapore Prime Minister Lawrence Wong announced the country's budget for its 2025 fiscal year. It unveiled a slew of support measures for households and businesses to cope with cost of living pressures, as well as schemes to support the development of local companies. One notable announcement made by Wong in the budget speech was that Singapore would study the potential deployment of nuclear power in the country, after having initially assessed in 2010 that conventional nuclear energy was unsuitable for the city-state. Gan told CNBC that the main consideration for Singapore was the safety and maturity of nuclear technology, also noting that Singapore's small land size prevents it from having a large safety buffer zone, such as those in traditional nuclear plants. The island of 456.3 square miles relies on mainly liquefied natural gas to fuel its energy needs. In 2023, around 95% of its energy generation came from LNG. Most of Singapore's natural gas comes from Malaysia and Indonesia. The remaining 5% of electricity supply is generated by a mix of coal, oil, solar and waste. Hence, Singapore is observing the development of small modular reactors, or SMRs, to assess if they are suitable for the country. It all depends on the development of technology, for example, how we can commercialize the SMRs to make sure that they're viable and they are suitable for us. Gan said, while he did not specify how long it would be before Singapore implements nuclear energy, if at all, Gan said, it will take time for ourselves to be ready for the SMRs when the technology is available, he said. Even preparation of sites will take time.
Apple announced a new iPhone model on Wednesday that is priced lower than its main iPhone models, which usually come out in September. The new iPhone is called iPhone 16e, and it will retail for $599 when it goes on sale later this month. The new iPhone 16e doesn't have a home button and fingerprint sensor. Instead, it uses Apple's Face ID scanner and modern design, including a sensor notch at the top of the screen. It uses Apple's A18 chip, which is also used in the main iPhone 16 models. The updated processor means that the iPhone 16e can run all the same apps and games that more expensive iPhones can run. It comes in black and white. The phone also includes Apple's first cellular modem, which it calls C1. iPhones have used Qualcomm modems for the past few years. It also has a single camera lens, versus as many as 3 on the most advanced iPhones. Apple is releasing a new low-cost iPhone as sales have been mixed in recent quarters and the company seeks growth for its most important product category. For the December quarter, Apple's overall iPhone sales were down 1% on an annual basis. Apple still sold more than $69 billion of phones in the period. Low-end iPhones are important to Apple as it gets new customers into their ecosystem, and the new device supports Apple Intelligence, making it Apple's least expensive new phone that can access features like image generation and notification summaries. Apple's current models are the iPhone 16, which starts at $799, and the iPhone 16 Pro, which starts at $999. Before Wednesday's launch, only the iPhone 16 and iPhone 15 Pro models were the only phones with access to Apple Intelligence. Apple has released a less expensive iPhone model to round out the bottom of its lineup since 2016. The iPhone SE, as it was called then, got further updates in 2020 and 2022. Generally, the iPhone SE reuses an older design than the newest iPhones, but Apple updates its components such as its processor so it can receive ongoing software updates. After the old iPhone SE sells out, there won't be any new iPhones with a fingerprint scanner. It was also less expensive than the iPhone 16e at $429. The launch also marks a new approach to Apple's famous product launches, which garner media attention around the world. Previously, Apple would reveal new products live and on stage, at a presentation on its campus in California. In 2020, Apple stopped inviting people to live launches and started screening marketing videos on its website and YouTube instead. In recent years, Apple has started to quietly release new products through press releases, such as the new Macs it announced last September. It may be testing how much buzz it can get for one of these quieter launches. Last week, ahead of Wednesday's launch, Apple CEO Tim Cook posted a message on social media: "Get ready to meet the newest member of the family. Europe is at risk of becoming a museum if it doesn't soften strict curbs on artificial intelligence technologies and deregulate," Sweden's Prime Minister Ulf Kristersson said Thursday. "I think we really need to step up in Europe. The American economy, Chinese economy have been growing far faster compared to the European economies over the last 20 years, the Premier told attendees of the Tech Arena event in Stockholm. If we don't change that, Europe will actually become some kind of a museum compared to other parts of the world," he added. Kristersson's voice joins a chorus of European leaders who spoke at the Paris AI Action Summit last week, stressing the need for the region become a more competitive player in the global AI race. French President Emmanuel Macron announced a €109 billion $113.7 billion investment in AI, which includes commitments from both foreign investors like the United Arab Emirates and US American and Canadian investment funds, as well as domestic firms like Iliad, Orange and Thales. Macron at the time compared the scale of the investment commitment to the $500 billion Stargate private AI investment venture announced by President Donald Trump last month. European Commission President Ursula von der Leyen also said that the EU would mobilize a total of €200 billion, $208.6 billion, for AI investments in Europe. Against this backdrop, U.S. Vice President J.D. Vance took aim at Europe, arguing officials in the continent have become too heavily focused on regulating AI instead of embracing its growth potential. Touting America as the leader in the technology, Vance said that the U.S. wants its European allies to foster a more favorable attitude to the technology than it has done to date. To create that kind of trust, we need international regulatory regimes that fosters the creation of AI technology rather than strangles it, and we need our European friends in particular to look to this new frontier with optimism rather than trepidation, Vance told attendees at the Paris summit. Tech executives have previously criticized the EU for taking too strict a regulatory approach to AI. The bloc's landmark AI Act, which became enforceable this year, is the first comprehensive set of rules aimed at safeguarding against risks posed AI. To be able to compete in the new geopolitical context, Europe needs to become a place where business and innovation can thrive, Kristersson said Thursday. That means less regulation. That means more access to capital and talent. He added, as it stands now, we've got companies having troubles using the latest technology due to uncertainties with the European legislation, companies founded in Europe relocating to the US due to the lack of access to capital. That is simply not good enough.
Elon Musk-led Department of Government Efficiency has cut 3 out of roughly 7 people in a U.S. auto safety agency unit overseeing the safety of autonomous vehicles, The Washington Post reported on Thursday. The workers fired by the agency headed by the Tesla CEO said they do not believe they were targeted because they are examining driverless cars, the newspaper reported. The Autonomous Vehicles Safety Unit cuts are part of reductions at the National Highway Traffic Safety Administration,
which is losing about 10% of its workforce through firings and buyout offers, according to the Washington Post.
Bybit, a major cryptocurrency exchange, has been hacked to the tune of $1.5 billion in digital assets, in what's estimated to be the largest crypto heist in history. The attack compromised Bybit's cold wallet, an offline storage system designed for security. The stolen funds, primarily in Ether, were quickly transferred across multiple wallets and liquidated through various platforms. Please rest assured that all other cold wallets are secure, Ben Zhou, CEO of Bybit, posted on X. All withdrawals are normal. Blockchain analysis firms, including Elliptic and Arkham Intelligence, traced the stolen crypto as it was moved to various accounts and swiftly offloaded. The hack far surpasses previous thefts in the sector, according to Elliptic. That includes the $611 million stolen from Poly Network in 2021 and the $570 million drained from Binance in 2022. Analysts at Elliptic later linked the attack to North Korea's Lazarus Group, a state-sponsored hacking collective notorious for siphoning billions of dollars from the cryptocurrency industry. The group is known for exploiting security vulnerabilities to finance North Korea's regime, often using sophisticated laundering methods to obscure the flow of funds. We've labeled the thieves' addresses in our software to help to prevent these funds from being cashed out through any other exchanges, said Tom Robinson, chief scientist at Elliptic, in an email. The breach immediately triggered a rush of withdrawals from Bybit as users feared potential insolvency. Zhou said outflows had stabilized. To reassure customers, he announced that Bybit had secured a bridge loan from undisclosed partners to cover any unrecoverable losses and maintain operations. The Lazarus Group's history of targeting crypto platforms dates back to 2017, when the group infiltrated 4 South Korean exchanges and stole $200 million worth of Bitcoin. As law enforcement agencies and crypto tracking firms work to trace the stolen assets, industry experts warn that large-scale thefts remain a fundamental risk. The more difficult we make it to benefit from crimes such as this, the less frequently they will take place, Elliptic's Robinson wrote in a post.
Berkshire Hathaway is committed to its Japanese investments for the long term and has reached an agreement with the companies to own beyond the initial 10% ceiling, Warren Buffett said in his annual letter to shareholders released Saturday. From the start, we also agreed to keep Berkshire's holdings below 10% of each company's shares. But, as we approached this limit, the 5 companies agreed to moderately relax the ceiling, Buffett said. Over time, you will likely see Berkshire's ownership of all 5 increase somewhat. The Japanese names in Berkshire's portfolio are Itochu, Marubeni, Mitsubishi, Mitsui and Sumitomo. All 5 are the biggest, Sogo Shosha, or trading houses in Japan that invest across diverse sectors domestically and abroad, in a manner somewhat similar to Berkshire itself, Buffett said. Berkshire first bought into the companies in July 2019. At the end of 2024, the market value of Berkshire's Japanese holdings came in at $23.5 billion, with the aggregate cost at $13.8 billion. The investor highlighted the company's management's relationships with their investors, as well as their capital deployment strategies. Buffett has sold Japanese debt to fund Berkshire's shares in the Japanese companies. Issuing yen-denominated bonds also allows Buffett to reduce foreign exchange-related risks. Berkshire reported $2.3 billion in after-tax gains in its Japanese bonds, of which $850 million were from 2024 alone owing to the strength of the dollar, which appreciated around 11% against the yen in 2024. We like the current math of our yen-balanced strategy, Buffett stated. He added that designated successor, Greg Abel, and I have no view on future foreign exchange rates and therefore seek a position approximating currency neutrality. The Oracle of Omaha forecasts the annual dividend income from its stake in the 5 Japanese trading houses will come in at around $812 million.
I expect that Greg and his eventual successors will be holding this Japanese position for many decades and that Berkshire will find other ways to work productively with the 5 companies in the future, said Buffett. To be sure, the 5 Japanese trading houses have struggled in the past year. Itochu and Marubeni are down more than 8% each in that time, while Mitsubishi has dropped 26%. Mitsui and Sumitomo have lost 16% and 10%, respectively, over that period.